live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of the afternoon swing trading floor with your humble host, Jeremy Alexander Newsom, with another day of mentally delicious brain food. Reminding you love life, love life. What's going on, folks? From around the world. How's everybody doing? Oh, man. Packed house already. I like it. Frank says, hey. Christian, what's going on? Christine, how are you? Corey Jones, Dan C., Dawn, Deanna, Francois, Jean, Jerry, Marsha Toberman in the building, Paul Wilson, Patrick, Michael Wilson, Patrick, Santosh, Sybil, Tim. James says, what's up, playa? Alex in the building, how's it going? Today has been Mentorship Monday for sure. I'm going to take some breaths between my words, a little bit more than normal, to make sure my voice lasts for the next 6 hours. Because I got about another 6 hours to go today. Got a coaching session after this, and some other videos to upload. Got some emails to send you guys, all kinds of good stuff. But what a day we had. Today for Mentorship Monday, we're going to talk about options in the afternoon room. For those of you who were in the afternoon room, don't you despair. You're going to be getting over 3 hours of recording from today, from this morning, and you can soak up all the info. As you know, we like to have a Mentorship Monday, or at least I like to try to have a Mentorship Monday once a week. Sorry, I always say that. Once a month. So the next Mentorship Monday is going to be in March, and it's going to be on the 12th. The 12th of March is the next Mentorship Monday. We'll figure out, kind of closing in on that time, what the topic will be. But this particular option, or this particular day, most of you want to chat about options. That was a question most of you had. So we're going to dedicate today's entire session to just an educational overview of options. We'll set up an option trade actually on the SPY. Again, we don't know if it'll work or not, but we're going to set that one up. And I'll go through a pretty good analysis of it, at least as detailed as I can. And then you're also going to get all the recordings from earlier today. And then the next one will be March the 12th. And then the next Mentorship Monday after that will be April 2nd. And then the next one after that will be May the 7th. So it's usually the first Monday of the trading month. But we're mixing up a little bit since January. Kind of got started a little bit late with the free week, but all is good. No worries. So we're really going to focus on just a few select stocks today as we cover the overall analysis of setting up some trades. We're going to set up 2 or 3 option trades today. We're going to be discussing some things. I got some trades already ready to go. Obviously, the weekly option also comes out tomorrow. We'll look at the trades that we do have already placed. And then tomorrow is Tech Giant Tuesday, back on the grid as normal, looking at the stocks, looking at some analysis, looking at some setups, and answering any of your questions. So the SPY, what type of gap do we have today? What type of gap do we have today? Retest gap, exactly. White candle gapping up. So for my day traders, did it retest, yes or no? It did indeed. White candle gapped up. This lower shadow is the evidence of it retesting. In fact, if you come over here to the 5-minute chart and you pull this out this morning, almost verbatim what I was speaking about. And again, you'll get a copy of this recording, so make sure to check it out. I mentioned it was going to trade up to resistance. And as it was getting up into resistance, I said, hey guys, if you're going to play it bullish, let it either break out of that resistance and then retest, or let it trade down, see if you can buy the dip. And then at the later of the day, it broke out, retesting, and you're going to get a recording of me talking about going bullish right there on the SPY. So if you got a chance to do that, you made a little bit of gains at some point. Anyway, it was a good day for some day trades. During the recording, you'll see me talk about the SPY a lot. You'll see me analyze almost 80% of this candle on the 5-minute chart. So anyway, I like the gap. I like the potential morning star reversal that we're forming. That will be the last 3 days in a row, is this morning star reversal pattern. And since it is a retest gap, what I'm going to do is I'm going to look to buy some calls on a pullback. Look to buy some calls on pullback. So we're going to set up a trade, and what we're going to do in between all that is kind of go back and forth between SPY and show you what to look at. And if most of this is overwhelming for some of you, it's okay. Again, this is the last part of Mentorship Monday. So for those not in the morning room, you'll get all of that chatter that we've had, and you'll get all the videos. You'll have them forever, as long as you want them, and you can record or repeat those recordings as often as you need to. So let's talk about this trade. Gorgeous high wave, kind of indecisive candle on Friday. Phenomenal lower shadow. Beautiful bounce off the 200 simple moving average. In fact, if I pull up the 15-minute chart, this becomes so clear. Let me zoom out of here and turn this off. So if I zoom out just candles, on the 15-minute chart, you'll see some really good support resistances that kind of bounced around in here on the SPY. This was a nice kind of like a double bottom type of pattern. Here's the hourly chart, right? And we talked about that secondary wave rotation that we would come down to the 200 and bounce. So that's really what we're doing. So what I'm going to do now is I'm looking at, this is the hourly chart, and I'm going to find some support resistance, which is really right about here. This is that support resistance that I like. Now, that doesn't mean that we're going to get down there on the SPY, but I would like to set it up just in case. The price that I'm looking at buying calls off of would be a pullback of this resistance. You'll note that we almost got there 2 or 3 times already, and you can see some congestion over here. Since this is a retest gap, I'm looking for that retest or that pullback on the SPY. Again, if I come over here to a daily chart, you got the 100, 200 simple moving average. This particular entry would be below the low of today. So now that I'm looking at it on the daily chart, I'm like, I don't know if I want it to break the low of this candle before we got in. So let me go back into the hourly, turn the extended hours off, and extended hours off. I think I'm going to put it right there. I'm going to scoot that entry up just a little bit, expecting potentially tomorrow we do something like this and retest. Now again, this line that I'm using is I'm buying off of this candle right there. That nice big bullish candle, and you can see we had a white candle gapped up. We retested today. We're going to just see if we get a different kind of a bigger retest. So on the SPY, this is for my option traders, and this is something I mentioned in the recordings today as well. You can only, if you want to learn to trade options, you can trade just the SPY and learn as much as you could possibly handle. Learn as much as you want. But a lot of the questions you might have will probably be in the recordings from earlier today. What I want to do is I want to buy on a pullback. So I'm going to do a limit order, and I'm going to limit buy. I'm going to buy some calls. And let's look to buy some March calls. So we could be in this trade maybe, I don't know, maybe a week or two, maybe a little bit longer. But let's look to buy some March calls. And then we're going to look to buy the 262. All right, 262 would be pretty much one strike price in the money. So what I'm going to do is hop over here to Thinkorswim. There we go. Pulling up Thinkorswim now. And with Thinkorswim, this is a TOS software, so I'm going to pull up the SPY options chain. So here's SPY. And we're going to go to the March expiration. So regular March is March the 16th. All right, that's the expiration that occurs on a Friday. And based on my chart analysis, I mentioned that I wanted to do a 262 call option. So 262 is right here. So this is the part that I do explain a lot in the earlier recordings, but I will also kind of explain it now. I'm going to go and look at the option pricing chart of this option and kind of compare side by side the stock and figure out what price we could buy at. I'm also going to do that on another trade today. I'm going to set up 2 option trades today. I'm going to answer your questions, and then I think we'll be done, and then we'll go into Tuesday. So I'm going to right-click this. I'm going to click Copy. So what I'm doing is I'm copying the data for the option. Each option, believe it or not, has their own ticker. Just like a stock has its own ticker, each option has its own ticker. Regards the strike price and the sort of call or put and expiration date. So I'm going to take that ticker and I'm going to copy that ticker into an option pricing chart right here in Thinkorswim. So all I did is I went from trade to charts. Trade to charts. So this is just 2 charts. I can have 1, 2, 3, 4. You can have as many charts as you want. So I went from trade. I right-clicked, went to copy, and then I pasted that copy into this chart right here. And this is now a daily chart of the actual option price itself. A daily chart. So what I'm going to do is use the hourly chart over here on the stock chart. So this is the stock chart on the right. And you see the crosshairs, how they're moving together. So on the left side of the chart, you'll see the crosshairs moving much slower, but on the right side, it's moving faster. Because the hourly, this is an hourly and the daily. So if I switch this over to an hourly chart, here's an hourly chart right here. I'm going to turn off the, I don't need this right now. Remove my theoretical option price. Okay. So now I have a side-by-side stock chart and option chart. So I can visually identify where I want to buy the option. Pretty cool, huh? So I can verify that, and I can look at this particular chart and I go, all right, well, I wanted to buy this one over here. I mentioned in TradingView, I wanted to pull back to 262.74. 262.74. So that's going to be, if I were to draw this, drawings. I never draw in here. I was trying to. I guess I won't do it. I'm sure it's not that hard. But 262.74. This is pretty much right about here on the chart. So what you can do is you can compare, right? Just looking at the time frame. This is the first hour of the day, right? So I'm hovering over on the left-hand side. You should be able to see how the crosshair is moving back and forth. So this was the absolute low of the option today. The low of the option was 755. That option occurred at 262.74, which is really where I'm looking to get in. So if I take this trade, I'm looking at this particular chart, I can do a limit buy for right here, $7. $7 right at that support. This is the option price. This is the chart of the price of the actual option. And then if I'm looking at the candlestick on this option price, would you all agree that this is a pretty bullish candlestick, yes or no? I would say, yeah, it's a pretty bullish candle. So we could place our stop below that candle, or if we wanted to get really fancy, we could place the stop even farther. We can see the visual low of this option. We can look at it and go, okay, this option has never gone to $4. It's never gone to $4 before. So you could have a stop at $4, or you could have a stop a little bit tighter. Now notice $7 and $4, that's a $3 difference. I talked about this a lot in the previous recordings, but you guys can all imagine. All you have to do is you take your R, whatever that is, and divide it by 3. So 400 divided by 3 equals 133 shares. How many contracts is that? That would be 1 or 2 contracts. Exactly, probably 1. Now what I'm going to do is I'm going to go with the red line. It's a little bit more aggressive. I'm going to go with my $5 stop. So 7, 5, that's $2 difference. Whatever your R is, so let's say your R is 500, you divide it by 2, and that's going to give you 250. So you can either do 2 or 3 contracts. Because 1 contract of an option controls 100 shares. Now again, if this is over some of your head, it's okay. We've been talking options all day, so you're going to get all those recordings momentarily. So what I'm going to do is I'm just going to go ahead and set this trade up because I like the analysis, right? Remember, I started with doing analysis on the stock chart. I go, okay, cool. I want to pull back. It's a retest gap. Let me buy off of the support. That's pretty much it. Frank says, can you explain why 262 and why March? Does this mean you expect the price to be in 262 in March? Neither. So when we're talking about strike prices, remember, I'm just looking at buying an option that is in the money. That's all I'm concerned about, buying ITMs. We talked about that this morning, buying something that's in the money. I could pick March, April, May, June, July. I could pick any of that. When it comes to expirations, remember that it's all about your time frame. All about your time frame as a trader. Because when you trade options, it doesn't matter what time frame you choose. If you are right on the move and the option goes higher, you can sell it for a profit if you want to. So the longer the option, the more you're going to spend, you're going to pay, and the shorter term the option, the cheaper it's going to be. So the reason I chose March, Frank, is because that's kind of my time frame, as I'm usually in an option trade about 2 weeks. I'm usually in the option chain I'm usually in an option trade about 2 weeks max. So I'm going to buy March, and I'm going to be getting out of this trade in probably 2, maybe 3 weeks. So again, it's all kind of about your time frame as a trader. So I'm not saying that SPY has to get to 262 by March, because Frank, as you know, SPY is already at that price. SPY right now is at 265.34. So it's already above 262. Already there. Matthew says, do you know how to find the options chart on Charles Schwab? I don't. Some brokers don't have it, Matthew. Charles Schwab does not have it. Street Smart Edge might. Street Smart Edge probably does. So Street Smart Edge is their downloadable, kind of like their Thinkorswim. It's like their downloadable platform. So Interactive Brokers does it. Yes, E-Trade does it. I mentioned earlier, do not let me forget this. You can also have a browser version of this, and I'll pull it up in a bit. You can do it on Yahoo Finance. Nitro says, should you do this trade if you have a $100 risk unit? No. No, you should not, because this particular setup, there's no way to buy the option with less than $100 risk with the numbers that I'm doing it right now. You can take this trade with a $100 risk. Your stop's just going to be a little bit different than mine. Your setup's going to be a little bit different than mine. Joe says, any thoughts on doing the same trade on a March weekly if it's cheaper than the regular expiration? Their weeklies will always be cheaper, Joe. They're right. The cheaper, the shorter the amount of time, the less expensive it's going to be. So it's always going to be cheaper to buy less time. That's just the way it is. It all comes down to your time frame, right, as a trader. So if you're more active and you can be in and out, you can do a shorter term option. That's fine, because it's all about risk. James says, didn't you say Thinkorswim account for a couple of bucks, you get their charts? Honestly, you can just go to TD Ameritrade, James, and you can open up an account and you can just download Thinkorswim, and you don't have to put any money in there. Back when I did it, I mean, you had to have some money in there, but most people are telling me that you don't have to put any money in there. So you can just open up one for free and get TOS for free. If anything, you might put $1 in there just to keep it open. But TOS also does futures. It does a lot of cool stuff. It's a very, very powerful platform. Dan says, but the data is a 20 minutes delay. On paper trading, that is correct. Yep. On paper trading, it's 20 minutes delayed. But most brokers are. Most brokers have a 20-minute delay on their paper trading functionality. So what I'm going to do is I'm going to set this trade up. This is going to be an official trade. So how I would do it is I'm going to right-click the chart. I'm going to come down here to where it says Buy Custom. And I'm going to click on something called an OCO bracket. Many of you have asked me, how do I set an entry, stop, and target all at the same time? This is how you do it. So you go to Buy Custom, OCO bracket. Thomas says, my TOS, you can always ask TOS for live data with paper trading. I just don't ever paper trade, but I guess that makes sense. So Jim and Thomas both said the same thing. You can just ask them to have live time data. All right, that's cool. It's good to know. Thanks, Thomas. Thanks, Jim. So down what we have below is we have the option setup. So we have a trigger, we have a stop, and we have a limit, and we have a stop. So immediately I can set up an OCO bracket based on the option price to create it. Lisa says, how are you drawing on the charts? I'm doing that with a different program, Lisa. I'm running a separate program in the back for the through the webinar. Yep, so this is TOS does not have that cool functionality. So what I'm going to do is I'm going to do a limit buy of $7 on this option. I'm going to do good till cancel. I'm going to do a stop of $5. It's a $2 risk. And I'm going to do a target. If my $2 risk, I'm going to do $11 as my target because my risk is $2, so I want my target to be $4. And then I'm going to come in here and change the contracts to $2, 2 contracts, and this would be the trade. This would be the trade right here. So if we come back over to TradingView, right? TradingView is just the charting software because it's all so much prettier, so much easier to use, bigger numbers. It's much, much better for teaching than TOS. TOS just gets scary. So I'm going to do this. I got to now fill out this information over here. Limit buy. I'm going to say regular March. So regular March is just the expiration date. Regular March 262 calls, $7 limit. And then I'm going to have the stop. I'm going to put this on the top. And I'm going to put it in the worksheet, and that'll be official trade, and then I'll answer some questions. So this will be a stop of $5 based on the actual option price. I'm going to come over here. I'm going to put that into the journal. Swing trades. Today is the 12th. SPY, $7, $5. Put options. It's a good trade setup based on a retest gap. And it is open because it's not triggered yet. And it's right here. I can put it in the chart, and I can go over to Slack. And then put it in Slack. And again, a lot of the questions you might already have is, when do you exit? How long do you hold? All of those questions already answered in the previous classes. You're going to get over 3 hours of option stuff, folks. New official swing trade. Okay, so that's the trade set up on SPY. How long I'll leave that open? Probably 2 or 3 days. Jill said you could also just buy the stock on this trade, right? Absolutely. Yep, don't have to trade options. You could just trade the stock. I do like the setup. I like the pullback. What I'm looking for SPY to do realistically is actually maybe tomorrow, something like this, but eventually something like this, this, and this one more time. So remember how I drew that a few days ago? I want the same form, but now bigger. Same kind of function. So I think we're going to trade up a little bit higher. My target would be about here somewhere. We get another roll down and another bounce of some kind. And that would be, if you haven't gotten in bullish longer term, this would likely be the opportunity for you to do so. I do think you're going to get another one of these opportunities. Yates asked the question, so you still see it retesting that low, even if the SPY trade works? At some point, yeah. I still seeing it not necessarily coming exactly down to here. Maybe. You could do something like this, but it's going to have some type of retest. Yeah, some type of pullback. I do not think that the markets just go possible, very possible, but I don't see it yet. Now, let me show you one other trick on Thinkorswim. Let's say that I only want this trade to trigger if SPY is actually below my stock price. So let's say I want the trade to not just trigger based on the option price, because sometimes, well, not sometimes, the option price can fluctuate based on a lot of different variables and factors. Let's say, for example, I only want this trade to go through if SPY comes down to 262.74. So I'm going to go back over to Thinkorswim. I haven't submitted the order yet, and I'm going to show you how you can do that in TOS. Most brokers can do this. TOS is solid, though, when it comes to option trading. What I'm about to do, folks, is create something called a price contingency. Price contingency. Again, if your broker doesn't have this, that's cool. You can get another one. If you want. You don't have to. I'm just letting you know, TOS has everything you need to trade options. If you don't want to trade options, awesome. Don't even worry about it. What I'm going to do is I'm going to go to a price contingency, and you see where I want to buy the actual option. Come over here. So this green line, notice this green line says buy, and the other are sells. So I would come to this cogwheel right here, right beside where it says exchange, best. So sometimes I can update, you can update these if you want, but you're going to click on this little cogwheel. And this cogwheel pulls up this order form. Delete the price contingency. And what it says is, here's the order. So I want to buy, this is the main order. So this is what I want to occur. I only want to place this order if this happens below. This is a cool strategy because you've heard me say all the time, I want to get into a trade if something closes above a certain price, or for my day traders, I say I only want this trade to be valid until 3:30 a.m. or p.m. or not a.m., but 3:30 in the afternoon. This is how I do that. So I can come down and say, submit this trade, and I have an exact time and an exact day by which I submit it. So I can change that, right? So I can say, don't submit this trade at all for the first 30 minutes of the market. I can say, don't submit this trade until Thursday. When my plan goes through, I can say whatever. Most brokers have this part where you can create a condition. And again, you can have it cancel at a certain time. So remember, I write into my charts, and you guys see me do all that all the time. I say, all right, if this trade doesn't trigger by X date, then let's cancel it. All right, so I do that pretty frequently. That's how you can do that. Now, if I come down here and click on SPY method, you have a few different methods, but you can do MARK as market. That makes sense. Bid and ask. So let's just do market. The trigger, greater than, less than, or equal to. So you have the greater than, less than, equal to triggers right here. So if SPY so again, it reads down here. If the market price of the security is greater or equal to, so I haven't put it in yet. So this is less than, this is greater than. So I'm going to type in if it's less than 262.74. So if it's less than 262.74, so only if the SPY is below that price, then the order goes live. If it's never below that price, it will not go live. And you can build as many as you want with this. If for my nerds out there, and I say that in the kind way, you can come down here to where it says study. So method, right? SPY method, come down to study, and you can click edit, and you can go build any other functionality that you want. It can be a simple moving average. You can add a condition. You can do a value of the less than or equal to. You could do a study that you built in, a function, a price. You can add so many things. This is going to get real deep, real fast. But you really, at the base core of it, only need to use probably a main condition. One main condition is fine. So something like this is the vast majority of what most of the trades I'll do. Is something like, all right, I want to set this trade up and only submit it during this time and then cancel it at this time right here. So if you want to go in, Thomas says, thanks script. Exactly. You can build your own studies, which I've been hired to do. I've done algos for other traders. I don't write the algos. I just give them the strategy, right? We'll sit down. I can go, you can nerd out. You can go deep. You can build indicators, moving averages, trailing stops, MACDs, volume, Bollinger Bands. You can build whatever condition you want. So you say, only take the trade if all of my conditions. You can have 100 different conditions if you really want to. Is that cool or is that cool? It's pretty sweet. You can have as many conditions you want. So you talk about a trading plan, you can have, okay, if RSI is blank, 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 and this above the moving average, and so on and so forth. I mean, you can build it out exactly. That is Eastern Standard Time, yes. You can also, not to talk about it more, but if you come down here and go to study, you can see how it has simple moving average. So when I talk about simple averages all the time, buying off the 200, you can say, okay, if it's at the 200 simple moving average and the price is XYZ, then buy at market or limit, or you can set up your trades in however you want to. And that is just, it's a really cool functionality, and it's nifty, if you will. Quite nifty. Very nifty. So now that we're back over here to the TOS chart, the trading view chart, I want to go really quick and look at the 2 swing trades that we do have. So we have WATT, W-A-T-T. This was a trade that we've been in forever. And Thomas says the time in TOS can be set relative to where you are. Thank you so much, Thomas. And by the way, folks, if you haven't figured this out, I'm going to use Thomas as an example. There are many traders here who know a lot more about this stuff than I do, and that's why Slack is a very helpful tool. I learn something new every day, mostly from Thomas. Thomas teaches me something new at least once a day. So you can go and ask, hey, is there anyone, offer to pay them if you want. Say, hey, can I give you $20 for someone to walk me through X, Y, Z? I mean, money talks. If you want someone to help you with something, you can do it that way. I mean, me or someone else, it's up to you. But there's plenty of opportunities out there to go learn, have people help you who are very, very good at this. I had a guy teach me about Thinkorswim a while ago, and I learned a lot from him. But I don't use it to the fullest of its extent. I'm usually that way with most technology and most machines. I use it for pretty much its sole purpose, but I don't get cooler than that. So it is what it is. Watt for us. So we have a trade plan in Watt that it needs to close above 21 by Wednesday. If that does not happen, then we're going to look to close Watt, hopefully for a small gain. Deanna says, as a newbie, I appreciate all the information I'm receiving through Real Life Trading family. Thanks for everyone. Absolutely. Thank you for being here. It's an honor, privilege, and joy to enrich lives to all of you folks. Super amazing. All right, so that's Watt. We're in this one. Now, let me cry on your shoulders about Riot here for a second. I had one trader who did not adjust the trade, and he said that he did not get filled. I don't know if anyone else had the order and they adjusted it like I did on Friday. So if you did not adjust it, you still might not have gotten filled. That's what my buddy Kyle Williams said. He said he did not get filled on 1657. So if that was the case, sorry. I'm going to leave this trade open for 2 or 3 more days. What I'm looking to do is, what type of gap is this on Riot? It is a retest gap, exactly. And so since we have a limit order open at 1609, I'm hoping tomorrow, well, not necessarily hoping, but planning for tomorrow to get some type of wick down there for us to fill the gap, and then I can move up the stop below the wick, and then hopefully she bounces. That would be best case scenario. So I'm going to leave Riot open probably until Friday. Let me jot that down on the notes here. Today is 2/12, 2/12/18. Leave open until Friday. Possibly. I mean, if it just runs to the moon, I can cancel it. But I'm okay leaving this trade open for a bit. And then the other trade was AMBA. AMBA, and this was a trade that we did get triggered into. This is the shares. Again, if you want to trade the options, you could have traded the options, but AMBA, we got traded in off of this potential double bottom, and we'll see if it bounces. I don't know if it will or not, but it's a good entry. So if the market really runs or the Qs do something, I did mention that I wanted it to trigger by the end of day Tuesday. Today is Monday, and it triggered, so okay. We'll see if AMBA bounces off of that support. I have no idea if it does or not, but you rarely know until you're in the trade, then you find out. Is it going to work? I hope so. I'm not sure. Okay, I want to set up one other trade. I'm going to then answer any questions you guys have, and then I might get a lot more questions after I send out the Mentorship Monday videos for all the option stuff, and that's fine. If you guys have any questions, just let me know. I'll do my best to help. There's only so much we can accomplish in an hour, but I have other videos out there on YouTube covering almost all of this stuff. I have some secretive videos too, but there's not that many that only traders in the trading room get. But if you guys have a question, I have a video, I'll send it to you, no problem. So NVIDIA, what I like about NVIDIA today is it was an inside candle. But on Friday, you actually had a pretty good bullish gap. So here's the hourly chart. And I want to create a bullish breakout on NVIDIA. Sorry, let me take this drawing back. So this is the drawing of what I wanted it to do today. I wanted it to break out and retest. So here's some analysis. Right now, NVIDIA is perfectly sideways on the hourly time frame. You got a little bit of a higher low. That's cool. But the EMAs are sideways. I really would like to get in bullish here with the stop right there. Challenge is going to be, in doing so, in that situation, that could whipsaw, I could get triggered in, triggered out, and then it breaks up higher. So what I'm going to do is go look for a breakout above here and figure out an option trade that we could take maybe for March and see if we can set that up. So once I've done the analysis on the stock chart, I'm going to go find an option that looks good and see how the option chart looks. It might be too expensive. Maybe we can only buy one contract, but we'll see. So Frank, if I wanted to get in based on the stock price at 239.23, what strike price could I select? Camilo says 240. Absolutely, 240. We could definitely look at 240. That would be a good one. 240 and below, pretty much, right? So really what we have to do is go to the option chain and look at 240 and just see what chances we have. We probably have 240 and 235. So now let me hop back over to TOS and then go to the option pricing chart, NVIDIA. So this is not the option pricing chart. This is the option chain. And we have right now for March 240 and 235. So we'll go to the 235 call. I'm going to copy that call. I'm going to hop back over to the chart. Uh-oh. What chart is this? Profit chart. Sorry. So this is what I clicked on. So you have flexible grid, product depth. Guys, TOS goes as deep as you want. Profits, this is where I was. I don't really want to be there. I want to go right here. All right, so I'm going to copy and paste here. I pasted the option chart. This is the hourly option chart that we were just looking at. So here's the hourly time frame. So this is the hourly on the option chart. All right, this is the pricing of the option. And over here, this is the hourly chart of NVIDIA, the actual stock price. Tim says, do you have to use Control-V to paste? You don't have to, but that's what I use. Great question, but you can use, you can actually click on the mouse if you want. I don't know if there's any other hotkeys for pasting, but I just use Control-V. So what we have is this is the stock chart to the right. This is the option price to the left. And if I want to get in bullish on NVIDIA above here, All right, that's the breakout. What value would that option be? Because we can kind of look at it and go, well, it could be $16, it could be $18. That's kind of a wide spread. It could be somewhere in that range. You know, what value would you choose? So this would be a fantastic time to create a stock contingency, because I only want to take NVIDIA bullish if the stock breaks above the high. But then once NVIDIA breaks above the high, I'd probably want to get a pullback on the option price. Here's a little bit of a tip. Options always move more volatile than you think they do. So give yourself a little bit of breathing room is fine. Will you miss the trade? Sometimes, yep. Sometimes you will. I don't mind using stop market or stop limit orders. That's totally fine. But I really like using stock contingencies when I'm getting into an option trade, because I want to make sure the stock is really above that price. So for me, the way you would set this trade up is, if I'm buying an option, let's say that option right now, let's say I buy it at 17 and I have a $500 risk. If I place my stop at 16, how many contracts could I buy? I could buy 5, exactly. If my R was 100, how many contracts could I buy? I could buy 1. With options, these things are very volatile. Believe it or not, most traders think that options is fantastic for a smaller account. While they are good for a smaller account, be prepared to experience a lot of whipsaws on these things, because the prices are extremely volatile. They can move 50 to 60% per day, no problem. 50 to 60%, easy. Talk about cryptocurrencies and Bitcoin being volatile, right? So in this particular situation, you'd want to give yourself, I think, a little bit of wiggle room. So what I would do in this situation, and I will set this trade up, I do like the trade, but I'm going to do it with a stock contingency, is I want to buy when the stock is above here, and I want to do a limit order of 16 bucks. The reason I'm doing a limit order of $16 is because it's pretty close to that resistance, right? If the stock broke out, the option price would probably be right about here. And if the option price does break up and then it pulls down, right, once the condition is met, then the option will go through. I also talked about this in the earlier segments, but these things have a very, not the specific stock, but options can have pretty massive bid-ask spreads. So I would do a limit buy of 16. Because again, based on the option price, it's probably going to be right about there. And I'm going to do a stop on that particular trade, right? 16 is the entry. I'm going to do a stop at 11. That's $5 of risk, so I could buy a contract with a $500 R. Again, I want to do that trade, but I know a lot of traders don't have a $500 R. So if you don't have a $500 risk unit, you can either A, right, you would take this trade, or B, you trade shares, maybe. So the thing is, I love about options is, yes, they are cool for small accounts, but still you want to trade, and you can only trade certain stocks. I think the SPY is a great account, a great ETF to follow. The Qs, if you have a smaller account, the Qs, Micron Technology, US Steel, those are probably the main 4 that I would suggest to get really, really comfortable with. There's probably a few others. I'll think of them in a second. But these 4, if you have a small account, Apple is okay for small accounts. It can get a little pricey sometimes, but Apple is decent. So there's 5. Silver and gold gap way too much. If you have a small account, which I would say is $5,000 or less, and you really want to trade options, and I've talked about this earlier, but I would highly suggest learning how to trade stocks profitably first. But if you want to trade options, that's fine. I would suggest picking these 5 and sticking with these 5 and seeing if you can trade them. Because remember, options are not a magical bullet to the fairyland of profits. They're simply an instrument. If you don't know how to trade, you don't know how to analyze, you don't know how to follow your rules, options aren't going to help you. There's a lot of strategies, and you guys are going to love the previous recordings that I do. But this is an example of, if you don't have that type of risk unit, some traders do have a $500 R, but if you don't, then you're not going to take this trade. I'm just letting you know I plan on setting up a trade on NVIDIA for a particular breakout and those accounting units. But a smaller account, these, or if you want to practice options, these are stocks that are great. Mila, great question, says, why not go out of the money to find cheaper options that fits individual risk? So you can certainly do that as well. The biggest challenge with out of the money options is if the stock does not move in your direction fast, then you are going to lose your investment, which, as I mentioned, with the absolute zero strategy is not necessarily a bad thing. So let me hop over here to the TradingView chart for a second. And let's say Mila wants to take this breakout, but she buys a 280 May call option. 280 May call option. That would be out of the money, very far out of the money. So if the stock broke above here, then she goes buys a 280 May. Let's just go look at how much a 280 May option would cost. So come back over to here. So now we're back over to TOS. Come down to May. I don't even have May, so we have June. All right, so we'll do June. 280 June. Even this far out of the money still costs you 800 bucks. I mean that's $60 out of the money. That's a very, very far away. So let's say you go to 380, right? 380, which is 150 points out of the money. You would only spend $1.10 on that option. The challenge is this option, in order to move in your favor, the stock has to move up exponentially because the delta on that option is very small. So even if NVIDIA goes from 228 all the way to, really if it did it, if went all the way up to like 260, so you had a huge move on NVIDIA by, I don't know, next month and a half, 2 months. This option would probably be the exact same value. It really wouldn't, it'd probably even go down a little bit. If you did open interest a little bit higher, here's a higher open interest, 1,200 open interest, it's $1.61. Now, if you take this approach and you go, all right, here's the deal. I want to buy a long-term out of the money option and I'm just going to put absolute zero on it. Meaning if my R is 200 bucks and I buy one of these, I can buy one contract for $161 and it's kind of lotto money. Put it on black and hope that black comes up. That's fine. You can absolutely do that strategy and that approach because when you win, you will win very big. The hardest part though, Mila, and this is the shocking part, is actually holding it to win big. Because what most people do when they trade out of the money option is they go up, 100, 200%, and they sell. It's like, dude, if you're trading an out of the money option and those things go in the money and you're selling at 200%, you're not doing the strategy correct. You want to sell these things at 10x, like 1,000% return. So the challenge of doing the strategy that you're referring to, which is just buying really cheap, really far out of the money options, which is, again, is a strategy. As long as you know your risk behind it, the hardest thing to do is to hold the winner because you will lose most of those. You will lose 70 to 80% of those trades, maybe even 90. But the one that you win on, you have to win more than what you lost on all the others. So if you do the strategy, make sure you win a lot and hold until you throw up. Because that's the point of those things. Because, yeah, you can have a good earnings and things go bananas and it really works out. Like you never know. But you want to hold for some really, really good returns. And you want to have some good rules in place for that. Charles says, is there a site with a list of companies with favorable option spreads and price points? I'm sure there is somewhere. I don't know of one off the top of my head. But those 5 that I gave you, Charles, thumbs up all the way. So most option traders who trade options very profitably, they usually end up selling options, not just buying them. Usually end up selling them. And in order to sell options, you do need a margin account. The most popular option selling strategy is probably, I don't know if it's the most popular, but I would argue it's either naked puts or cash secured puts, which is kind of the same thing. Covered calls, or credit spreads of some kind. If those are things that you ever want to learn, I do have a lot of classes on that are free and on YouTube, and I can send it to you, or you can look them up, and you can watch them and learn tons and tons and ask me any questions. I got videos on all 4 of those things. Because selling options does come down to probabilities. When you buy an option, the probability is not in your favor that you're going to win. Probability is actually low 30% that you're going to win on that option. When you sell an option, immediately, without doing any other analysis, your option is almost 70%. Almost 70% when you sell an option. That's just mathematics without doing any analysis. If you do analysis well, you can get 85, 90, 95, 99% win ratio. And then the one that you lose on, you just got to be really, really careful. You know what you're doing and how to, protect yourself and things of that nature. Pat says, do you have any videos on butterflies, especially with pinning? I actually do not trade butterflies. I don't like them at all, but that's just me. I also don't really like rutabagas very much, so I don't eat a lot of things with rutabagas in them. But I know a lot of people who love butterflies. I don't entirely see the point of butterflies since you're trying to control the stock rather than let it do its own thing, but nope, I don't have any videos on butterflies. I have videos on straddles and strangles. So I know we covered a lot today. There's going to be tons of other content coming your way, but we got 10 more minutes, 7 more minutes. Any other questions? We will be keeping our eyes on NVIDIA. I will have it set up. I'm going to do a stock setup tomorrow, especially if we stay on the sideways so other traders can get in. While you guys are kind of writing in your questions, just kind of understand that even if you have a small account, let's say your account's $5,000 and you're practicing your strategy, $5,000 is not that small. You can grow a $5,000 account. You do not have to do it with options. Matthew, thank you so much for reminding me. This is like the 4th time I was almost going to forget. Let me show you another place where you can get a very rough options chart if you're in a bind and you need one. Yahoo Finance has them. So Mila, give me a stock, Mila, and I'll do an example of an options bracket, another one. So if I go to this is Yahoo Finance and I click on options, okay? Now let's say I want to do March. I'm just looking at Apple as an example. You come to Yahoo Finance, you can click on whatever option you want. So I click on the actual option and then click on chart. And right here is a very rough estimation of the option pricing chart. It's not terrible. You can get a general idea. So whatever option I just selected, I went too fast, but I could see that there is some support resistance right about here. If that were to pull back, I could buy some around 550 and I could set my stop around $4. So that's $1.50 of risk. So you can use this chart. You can get a general idea. It's terrible with very poor, very cheap, inexpensive companies, but it can work. So that is the option pricing chart on Yahoo Finance. You can do a line chart. So you go to candle and just change it to line. Line chart looks something like this. There you go. So it's not really bad. Again, you can use it if you're in a bind or you kind of want a general idea of what the option price is doing. This will be a monthly chart of that option price. I don't think I have a monthly chart. Nope. Well, was it actually? Sorry, I was thinking. Alex says, would selling options be better than buying to grow a small account in the current market? So again, the challenge with selling options, Alex, in a small account is that one loss is going to be really bad. The truth about credit spreads with a small account. I got a video, an article on that. Here's an article. I think you guys will really like it. It's on my website, but I'll post it in the chat pane. So Alex, read that if you don't mind. There is no easy way to grow a small account, my friend. There's no easy way. Doesn't matter what strategy you do, it's all a challenge. Every one of it. It all takes a lot longer than you want. It's a lot harder than you want. It's all going to take time. Best way to grow a small account, though, Alex, and I mean this in a sincere way, grow yourself and you will grow your bank account. You want more money? Go out and learn something that's going to make you a lot of money. Learn new skills, learn new strategies, meet new people, learn a new approach, invest in yourself, grow your account manually. Other than that, though, a lot of other ways. Patience, yep, and it just takes time. It takes time. So Mila wanted me to do a bracket trade on TLT. So I'm going to go back over here to Thinkorswim, and I'm going to pull up TLT. Here's the stock chart. So this is the hourly time frame on TLT. So let me just go to a daily really quick so you can see it. So TLT, so here's the daily chart on TLT. It's got a morning star reversal. So a bracket trade, Mila, and I'll do it kind of fast, but a bracket trade would be an entry here and an entry here. This would be bullish and this will be bearish. So then you just set up the trade based on doing stocks or doing options. If you're doing options, I'm going to go, all right, what expiration do I want to buy and what strike price do I want to buy? So I want to do March 119 calls. So I come over to TLT, I click on March 119, copy and paste, hop over to charts, put it in here, drag this over to the left, zoom in on the, and I go, okay, so that option would be about 225. So I go buy custom, OCO bracket, 225, where should my stop go? About $1.25. All right, so I do 225. That would be a stop limit order. 225 is the stop, 225 is the limit. 225, 225. So that's the price of the option that I want to pay. My stop loss is $1.25 on the option. And then my target would be $4.25 on the option. And I do a good till cancel, good till cancel. I'm risking $1 per option. So if my risk is 500 bucks, then I can do 5 contracts. And that will be the bullish side of the bracket right there. If I want to add a stock contingency, I click on the stock contingency, right? Set that up. This will be the bullish part of the bracket. And then once I do that, then I just have to go in and create an entirely separate order for the bearish side of the bracket, and that's it. And then whichever one triggers, I just cancel the other one. And there you go. But this order right here that you're looking at, this is literally all you need to get into an order. This has your entry, this has your limit to sell, and this has your stop, and it's all based on an OCO, which means if this one triggers, it will cancel whichever one doesn't trigger for the target and for the stop loss. The beautiful part about this, folks, is if this was a lot for today, guess what? It's just February 12th. Let's keep doing it every single day, Monday through Friday from 5 to 6 p.m. Eastern Standard Time. We're going to be back for Tech Giant Tuesday tomorrow. And if you guys have any questions, you let me know. Mila said, what expiration and amount for the other side of the bracket? It would be the exact same thing, but in reverse. So if I want to buy puts on TLT, I would go with 118 puts because those are in the money. So I'd copy 118. I would still go with March. Come over here, put the puts. So here's the puts. And the puts, same value, 225 and 125. So I would just click on this, buy custom, OCO bracket, same exact setup. Javier says, if the bullish order triggers, will it cancel the bearish? Not automatically. You have to go in and cancel that one automatically. If you want to set up both of those orders, it's a little bit more of an advanced order. I believe that is one of these. I forget which one right now, but you go into, I think it's one triggers 3 OCOs, and you set up an entirely different order. Tim says, try copy and paste with the mouse. All right. Copy. Nope, can't do it with the mouse. Nope, just Command V. Good question. Thanks, Tim, for letting me know. Learned something new today. I've always just done it with the keyboard. So fantastic stuff. That was an hour. You're going to have a lot more coming. If you watched all of this stuff, all the recordings from today, congratulations, ladies and gentlemen, you did it. Feel proud. You can watch these videos as often as you need to. But we're done. I'll see you all tomorrow for Tech Giant Tuesday. And until then, remember, love life, live life, and trade. You guys rock.